Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker, here to whap and tap on your head with another ADH wealth solution. Before I go in, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth, or to schedule an appointment with a licensed financial professional. The links are in the description of this video. So, I always tell you the minimum investment is $10,000, and there's a reason for that. You don't have to have a full $10,000, but realistically, in order for it to move the needle, if you're not doing thousands of dollars, you're not going to benefit from those swings that you see, because unfortunately, even though the market swings in the form of pennies, 10 pennies can't swing the way 10,000 pennies can. So that's kind of how that works. So let's take a look here. What is a minimum investment? A minimum investment is the smallest dollar or share quantity that an investor can purchase when investing in a specific security, fund, or opportunity. A hedge fund, for example, may require that their clients deposit at least $1,000 with the firm, or a mutual fund may require at least $3,000. Okay, I'm not going to read this whole article, but it'll say, mutual funds, hedge funds, and then CMOs and stuff are going to have different requirements. Let's see. It says how minimum investment works. Minimum investment amounts can vary based on the mutual fund in question and can stretch anywhere from $1 all the way to 1 million. Again, if you're doing $1, you're not going to get anything back. Hedge, for example, if you invest $1 and it doubles, now you have $2. You can't really do anything with $2 more than you can with one. But if you invest $100,000 and then it doubles to $200,000, that's something you can do something with. For retail investors, there remains a large selection of funds that have modest minimum investments, usually starting at $100 and up. So even when people are telling you put $25 a month, Investopedia says here the minimum is usually $100 or better. A big factor for a fund manager is determining the minimum investment size and the strategy and liquidity, right? Because people who are like, oh, invest this little bit of money. Well, number one, they get paid a commission. So they're going to want to make sure it's a certain amount, because funds may also impose a high minimum investment to avoid the paperwork and bookkeeping of having a lot of clients. A fund may only have a handful of large clients, while other firms may have the same amount of capital under management, but that capital was provided by thousands of clients. Some firms prefer to cater to smaller clients with low minimum investment products, while other firms prefer higher minimum investments geared toward higher net worth individuals. Other funds may have minimum investments amounts that vary by trading platform due to arrangements between the broker-dealer and the fund company. So let's look here. Special considerations. Generally, investors must consider minimum investment allocations when seeking new investments. In other markets, a minimum investment may be set by a broker or simply by the purchase price of the security, multiplied by the quantity the security can be bought or sold in. For example, many brokers will require a minimum investment of $5,000 to buy corporate or treasury bonds. So, people, oh yeah, go buy bonds, go buy bonds. When dealing with larger clients or businesses, the minimum investment may be $25,000, $100,000, or even $1 million or more. Many mutual funds and hedge funds follow a strategy or simply track an index. Most indexes can be invested today by buying an exchange-traded fund. ETFs do not have minimum investment requirements of the many mutual funds and hedge funds, yet they may offer similar returns in many cases. Since ETFs trade like stocks, an investor can purchase as little as one share. Therefore, the minimum investment in an ETF is one share multiplied by the trading price of the ETF. Examples of minimum investment. So minimum investments vary drastically across mutual and hedge funds. The Vanguard Windsor Fund, investor shares VWNDX, has strong long-term performance, averaging 11.4% per year going back to 1958 as of April 2021. The minimum investment in the large cap value fund is $3,000. Once invested, clients can further invest funds in increments as little as $1. But the fund has an expense ratio of 0.29%. So for every dollar you put in with them, you're actually only putting 70 cents. Okay? On the other end of the spectrum, the Vanguard S&P Midcap 400 Index Fund, Institutional Shares, VSPMX, has a $5 million minimum investment. As in many cases, though, the fund strategy of tracking the S&P Midcap 400 Index is also available in an ETF, which can be purchased for the price of one share. While the price of the Vanguard S&P Midcap 400 ETF IVOO fluctuates daily, since as little as one share can be purchased, investors can invest with as little as a couple of $100. Billionaires wanted it. 54,578 investors got it first. When incredibly valuable assets come up for sale, it's typically the ultra rich who end up taking it home. Okay, well, I'm not going to go into that because they're talking about fractional investors. All right, so that's going to be it for today, ladies and gentlemen. White Bass, work in progress every day, and see success. Salute.